Hello friends, this is Martin from Secret, the channel for learning about trading and investing. Welcome to a new episode of Markets Next Week, the weekly stock market analysis show. And this is for January 24th, Monday 2022. So if you're not subscribed, subscribe to your friend, subscribe and share it to your friends and colleagues and all that you know so that we all benefit together. And we have very few subscriptions, so I appreciate your help in this way to keep us motivated. So without wasting time, let's get into action, right? Look at the charts. What do we have here, right? What a hopeful week it was last week when we discussed about the candlestick patterns. It was bullish, 4 weeks of up move and 3 big up move weeks on the Bank Nifty, right? So that was last week, and look at what is there today this week. It's a bull trap, and it's a wide range bearish, 3.5% and 2% on the Bank Nifty, 3.5% on the Nifty, right? Such a big fall. So that's exactly what happened last week. Big fall. No, we're not talking about fundamental reasons. It could be Fed, tapering, beginning of that, or it could be US inflation rise. It could be COVID, or it could be anything. But this is what the chart shows. It met with severe resistance here. It trapped all the bulls who were long because we had 4 weeks continuous up move, and then lower low is broken, and then it was going up, and now in just straight 4 days from Tuesday, it has fallen down. Such a big fall. Bank Nifty has shown good strength, despite the fall as being not that much as it would have otherwise done when the markets are falling. And this is across the sectors, all the sectors have fallen, right? So that's 3.5% for consecutive weeks of trend is done with, and so wide range bullish bearish move is what happened in trap the bulls. And it's Bank Nifty that fall 2% in after 3 weeks of recovery that happened, and again formed bearish weekly candle. And let's look at the daily candle. Look at the daily candle. This Friday's close is kind of indecisive doji. Friday's close is kind of indecisive small body doji. And look at this. It's at a, look at Nifty, and this is a support zone. So this is a zone from which it faced resistance and had fallen, and it is a resistance zone. This particular zone where it is right now, 17,600, and it had broken off from that and then fall back again. So the previous resistance is acting as a support, and that is what changed in polarity. Very powerful. It can give a bounce up. Same with Bank Nifty. This is a previous resistance zone acting as a support now, and there could be a potential. There is really probability that we can speak about. There is a probability that it can bounce from here up now because of change in polarity. So that's the daily indecisiveness in the market, but at a support level. It's potential change in polarity to work out. Now, Bollinger Bands, if you see, the volatility is high because the width from the median to the higher and lower bands are still wide. So such big moves are expected. But the contraction of the volatility has started on the Nifty at the bank. That's what you can see. And another thing that you can notice that it is at the median or 20 moving average support that the Bank Nifty is, but unfortunately this clearly shows that Nifty is much weaker than the Bank Nifty because it has slipped off from the median. But it is interesting, and support can bounce back always. But yeah, so Bank Nifty clearly showing strength. The Bollinger Bands also, and Bollinger Band has showing some consolidation because upper band has started the contraction. Don't know whether it's going to contract till here, or it's going to just contract and then go further up. Never know. But contraction started, but volatility is high because the width of the band itself, 10 to 20 is big. Now coming to the support and the resistance, this is very crucial, right? This is the daily candle. You can see that it's currently at the support of 17,500 and 17,600, which is Fibonacci 20th retracement level from the top. And now the resistance upside would be 17,800 and 17,850, and then after that you have the 17,950 to 18,000, and then after that you have the 18,100 and 18,200 and 18,350, 400. Those are the resistance on the upside. Downside support 7,500 is broken, then you get into 17,350 to 17,400, then you reach 17,200 to 17,300, then you reach 17,000 levels, and then Below that it's 16800 to 16900, which is Fibonacci to 38 levels. So that's a support resistance that you can see on the short term on Nifty. Now similarly look at the Bank Nifty. Here the picture is that we talked about the support zone. It's right now at 37,300 and 37,400. It's a Fibonacci 23 support level that it is at right now, Bank Nifty. And if the resistance first would be to take out is 37,700 to 37,800 levels, and after that 38,000 has to be taken out, and then 38,500 levels, and then above that we have the 39 levels, 38,900 to 39,000 levels. So that's the resistance to the upside. Downside, if you see, if this current support of 37,300 to 37,400 Fibonacci 23 level is lost, means you first support can be seen 36,900 to 37 rounding number. Now that plays, and then if that's also gone, then you reach to 36,300 to 36,700 Fibonacci 38 retracement levels. That's also gone, then you have end up 35,600 to 35,900 that levels. Below that, so you will reach 35,000, which is the Fibonacci 50 levels. So make a note of clearly this support and resistance levels. These are clearly drawn on the price action and the Fibonacci retracements. Right? You can identify these levels on different aspects, but I have it done based on. So make a note of these levels, correlate with the open interest data, and then take your decide your strike price if you're playing the option or no. No, you have to play according. Now the next point that we have to look at is momentum and the trend. The momentum is in the sideways zones. Obviously it was bullish, but no, it is in the sideways zones, the daily and the weekly. No, daily and weekly both have now turned sideways. Now Bank Nifty is already sideways momentum daily and weekly, daily and weekly. So the monthly is only one where it is bullish right now on the indices, right? So overall it is sideways, so that part clearly the momentum is indicating. Now at 10 bar bearish divergence, is there or anything? That is something that we have to see here. So this is the divergence. It's a bearish divergence. That means you can see that the Nifty, the price is moving up and the momentum has been dipping, right? So this is a daily chart. Actually the divergence is seen better on a weekly chart. So this is it. Price is moving up and momentum is dipping down. So there is every chance that the price will dip till this point of 17,000. So there is every possibility that if the divergence is confirmed, actually it has started going below. So it's a weekly divergence which could take it to 17,000. It's weekly bearish divergence on Nifty alone. Bank Nifty we don't see any divergence. But Nifty daily time frame, if you see that the momentum is sideways, weekly time frame also momentum is sideways, and divergence of the weekly is on the Nifty, that is bearish. That's what the momentum and trend is talking about. Now trend has crossed over to the bearish zones on the Nifty and the Bank Nifty. Crossover has happened. That means DMI negative is positive now, so it's bearish trend on the short term on the daily time frame. Right now, the thing is, the higher time frame, which is the weekly time frame, the DMI it is positive on both the Nifty and the Bank Nifty. That means the trend has not crossed over to bearish zone on the medium term, but in the short term, the trend is bearish. Momentum, both medium term and short term, the trend has now changed into sideways, not bearish, sideways. That's what the momentum and the trend is indicating. The price we already seen what is Bollinger Bands we have seen. So these are the things that we look at to decide on the levels. That's about the charts and patterns. Now we'll come to the open interest analysis and volatility. Look at the volatility. The India VIX chart is what you're seeing on the right side here. It shot up more than 14% last week, and it is at a recent high low, recent high, which is now the 18 kind of levels, 18.89. 18.9 is high volatility range. It's on the top. So whenever it is the top, all you can anticipate, the probability is higher that volatility, whenever it shoots up, it would mean reward. Now whether it will mean reward at this 19 level, or whether it will go back and go further up to the 21 previous range high and then mean reward, you don't know. Especially when the Budget is due on the next week, February 1st. That time frame is where the budget is. Next week is budget. So before the budget, the volatility is definitely, it will shoot up because of the news, and the market speculations and all that. The fear and the greed factor would definitely move up. So volatility is rising up now. Whether it will mean road from here at this point, or it will further stay here, or will further move a little more and then mean road, no, but it will mean road for sure. When it mean road, the price cools up and we get the benefit. So if you have an option, seller. So that is something you have to keep in mind. Now, that's about volatility. The level is 18,189. So implied volatility is 17. Historic volatility is 10. So implied volatility is greater than that. So 60% is it's good. It has improved from the 30-40 kind of levels. The IVP, implied volatility percentile. So it's perfect for selling actually, right? This could further increase from 60 to 70, 80. Then it is very perfect for option seller, right? Because the scenario is that implied volatility is greater than the historic implied volatility, and IV percentile is greater than 50%. It is perfect setting for selling, right? So you'll have to identify the range, potential range where it can fall down to probably 17,000. Maybe the level has the Bollinger Bands or divergence indicating, and then from there if you short. So considering that the bottoms may be at 17,000, if you short, this could be very rewarding considering it's a budget week that is ahead. So that's about the volatility if you're playing that on the options. Now coming back to the opponent analysis, you can see that Nifty is at 17,000 level where the maximum put rating is at. So 16,500 is where the next place where the maximum put rating is. This is for January monthly expiry. Now highest resistance, the call rating highest is seen at 18,000. So going beyond 18,000 may be a hurdle from 600 to 600 right now where it is. Interestingly, there is a lot of call rating that is seen on 19,000 also, because people still expect that market could shoot up to 19,000, or probably it's hedge position that is taken from that is piled up. But anyway, right now the operators data is saying that the range could be between 17,000. Market could play next week anywhere between 17,000 and 18,000. 1,000 points is a very wide range to speculate. Now put call ratio is 0.71, which is not bearish but not bullish, not very bullish also, right? We can say the bank nifty 37,000 is where the highest put rating is seen. After that is 37,500 also as put rating. Resistance seen at 38,000. So 37,000 and 38,000 is where the gain is going to happen for next week. 1,000 point range. That is very small range considering the bank nifty, but for Nifty's 1,000 point range is big. And 40,500 also has got large number of call rating that is seen. Now 0.74 is also not that much bearish, not that much bullish also. Now futures operators built up last week is showing that it is a long unwinding that happened in the bank nifty, but it's a short build up that happened in the nifty. Long unwinding is kind of bearish. Really, people are long, thinking of going short. So short. So operators data is showing bearishness obviously on both the indices, but bank nifty and the put call ratio is also indicating that futures operators built up is also indicating that the levels does not give much of a clue, because it's a wide range between 17,000 and 18,000 and 37,000 and 38,000 on the indices. So it doesn't give much clue, right, as of now. So we'll have to correlate these levels, but it gives some clues because 17,000 is something that we identified as bearish divergence on the Nifty's target. At 18,000 we already know that it is a resistance level now. So correlate the operators data with the other data, chart data, and then find the levels and then play the game, right? So that's exactly what you're doing. This is what we are talking about, right? Look at this bearishness. These are all call rating that you see, right? So call build-up has increased in the last week for this monthly expiry. Here also you can see that the calls are dominating, the resistance is what is dominating, right? That's exactly what we are seeing here, right? So it's a repetition, same levels are put in here. Now, just to summarize the what happened in the different industry sectors, you can see that almost all the sectors are down. Not almost all sectors are down. 7% down. IT, that's where the market got biggest hit. 7% down because obviously because of some Fyers selling that much happened. No, it's 7% down because US market is down. Right. No, so momentum is also in the short term. Bearish on short term momentum, right? And side, weekly sideways. FMCG is closed at 2.5%, metal closed 2.5% down, auto sector down 1%, pharma sector 5% down, reactor sector 4% down. So everywhere it is down, 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 all sectors across. And the momentum is bearish in IT, bearish in FMCG, and it is also bearish in pharma, right? But reality auto metal maintain the momentum in the sideways in the short term, but sideways is not enough for us to confidently make a long position. So we need them to be in the short term bullish zones, which is so we just have to wait for stock picks as of now for long trades. That's what the industrial sectorial approach or sectoral analysis is clearly indicating us. Look at the institutional participation last week. If I sold 12,640 crores of cash, right? DS bought hardly anything, 500 crores was nothing as compared to the 12,640 crores of selling, right? Remember that the selling has been happening more than 1.5 lakh crores of selling has happened since the October month, and it's too much of. So even the new year also there is some hope that the selling at pause, but Fairs keeps continuing the selling, right? So that's the institutional participation. Now coming to the global markets, you can see that US markets were red clearly. Dow Jones, Nasdaq, S&P 500, all of them fell. 5 to 8% of fall. That's big fall that has happened. There is no. So that is why the same thing that is reflected in our markets. The all US markets across fall. Dollar index shot of 0.5%. USD INR closed with rupee further losing the strength, and crude oil also is shooting up. So crude oil shooting up, rupee opening up, US markets down, right? So these are all reasons where that clear indicates further bearishness, right? Now gold is shot up 1%, and trying to break out of the channel top is something that is optimistic, and it can face resistance again at 1876. Channel top was hit multiple times. Every time it has hit, it has fallen back. So we have to wait whether this breaks out of this zone. So if the gold is breaking out of this 17, 1876 or 19,000 kind of levels, then along with that, if the crude is at all-time high levels of 85 kind of levels, and the dollar is shooting up, then there is no other way than the market falling down. All these are clear indications. The gold shoots up and stock markets go down. Right? Crude oil is bad for economy. Dollar is strengthening, and still IT is falling. Right? This is all. There is a lot of bearish cloud that you see out there. We have to wait and watch. But let's not jump into conclusion. We just follow the charts, and then whatever the charts say, on whatever time frames that we are analyzing, that's the way we have to go. To stock picks, Trend. Trend is a Tata company. It's a retail arm of the Tata, and it is clearly trending in a weekly time frame within a channel, and the momentum is high. Volumes are good. Trend is also good, right? The trend line channel, and it seems like there is a rounding back on resistance, and it is trying to break out of that, right? So trend is a good pick for a swing and portion, not for daily or intraday. Adani Green Energy is breaking out. You can see that the Bollinger Walk has started, and it is a big breakout from a congestion zone, and then its momentum is shooting up, skyrocketing. Some big news is there out. Bollinger high, trend is high, and definitely this can be a swing trade. Adani Green Energy and trend limited. Now the usual weekly action number on the Nifty. This is a double diagonal collector spread, fully hedged, where your risk is defined. Reasonable risk reward and probability of profit. Reasonable risk reward if you are exiting, without waiting for the expiry ahead of that, right? At small target levels, right? But RiskReward could be reasonable, and it can benefit from the volatility rise before the budget and the break even. It would get the range, very nice range of 70,000, 18,000, 1,000 range that we are talking about in the open interest. Exactly is fully covered here. So sit tight, and then you can still make money, right, with the bigger positive benefits of that. So this is something that potentially could work out. So that's actionable, and then wrapping up the analysis for the week. So basically, last week what happened is it trapped the bulls and fall of 3.5% straight for us. Suddenly, the bullishness has turned out to be a bearish. With price action, momentum, trend, everything across the sectors have turned bearish. Right? So obviously, the bias has to be based on the charts and not on anything else. Chart shows short-term mild bearishness is what the view is based on the charts, based on the momentum indicators, based on the divergence indicators of trend. And apart from that, the data from the FIS selling 12,000 crores in a week in the beginning of the year again indicates it's got to be bearishness, right? The view. So this could be totally different. Now, two positive factors are there. Change in priority support levels for the indices, Bank Nifty and Nifty, right? Major support zone where it is a change in priority bounce that can potentially happen, as I mentioned earlier. Bollinger Bands for the Nifty shows that the price for the Bank Nifty show not weak. Bank Nifty showing that it is a support. It's a moving average, 20 moving average. Bollinger Band median support is there for the Bank Nifty. Bank Nifty has not fallen only 2% as compared to the Nifty. So there is some strength that is still there, in the Bank Nifty that is positive, and the change in polarity support zone which is another positive factor. So otherwise, mild bearishness. Mild because it's a support zone and it has fallen off big pins. It could be a pullback before a further bounce up. You never know. So that's why it's mild. India weeks 14% shot up and it is at the all-time high near to 19 levels, and then it could shoot up a little more before the budget and fall down. Mean road basically can happen. So be aware of that. Whatever strategies you are playing, go for current spreads. Can benefit. Identify the range and then sell counter spreads. That's exactly what you have to do during this time. Now, vertical option spread is always that you have to do. Never go for naked option if you're carrying forward, because you could have big gap ups, gap downs, and all that. This, especially if you do not know how to trade, options, or you're trading new to options, stay away during the budget times. If you know, this is what you have to expect. High volatility will be there before the market, before the budget, and after the budget all this high volatility will go off, cool off, and the price will cool off, and all the option sellers who had sold it at correct ranges will benefit, others will lose. So if you know the game, play it, otherwise stay away, because this is obviously every year. This is the last week of January is supposed to be highly volatile. Apart from the bearishness that you're seeing, it is supposed to be. So anything about 20, stay away from it, of the market. So that's the suggestion, and that's a view that I have. It's my personal view, not a recommendation. And if it helps you to frame your own personal view on the market in some way, then consider hitting the like button and share it to all your friends and colleagues. Thanks for watching. Happy trading and happy learning. Bye.